Friends, I welcome you all. In our today's session, our plan is to discuss three concepts. In fact, one is the concept of online trading. That means this is something which is related to our secondary market. Earlier, we have understood what is secondary market and what are the things which are traded there, and what is the trading mechanism. All these things we have discussed. I also understand that you must have studied one more paper called as security analysis and portfolio management. There you must have uh, must be having some idea about how to take decisions about uh, making investment in the stock market, like the concept of fundamental analysis, technical analysis. You might be aware of. Today, this class will be, in fact, to develop a kind of theoretical knowledge about online trading. What is that we are going to learn? And in addition to that, we'll be also learning the concept of dematerialization. We'll also learn about brokerage, about broker. Who are the brokers? What are the various types of broker? These are the three things we plan to learn. So, going to share the screen with you right now. So, three things as I told you: online trading, dematerialization, and the concept of broker. We'll be learning all these things. Three things. First, coming to what is this online trading? So, from the name itself, you must have guessed what is this, what happens here. Here in the stock market, which is in fact is a secondary market. So the securities are listed. So not only equities, maybe other securities which we're aware of, uh, like maybe bonds, maybe commodities. In commodity exchange, commodities gets listed, and exchange traded funds, options, futures, all these kind of financial products are traded in the stock market. And when we are doing that trading by using your computer or using your mobile phone, you can refer to that system of trading as, or that style of trading as your online trading. Meaning you are buying and selling by use of computer. You are in fact not going to a broker. Conventionally, what was happening when you want to buy financial product, be it equity or bond, anything. So you are supposed to contact your broker. You have to tell him that I want to buy this much of stock at this price, or I want to sell this much of stock at this price. Okay. So after that, only broker will register a request, and broker will be executing your order. Today, that is not required. On your screen itself, you can find out in your watch list. If you see, you can find out what are the stocks, what is the current price, and if you want to buy or sell, you can do that thing. Okay, you can just click plus or minus, it will be added, it will be bought, or it will be sold. In the mobile phone, you can. Same thing also you can do it in computer. That is called as online trading, right? So that is the concept. In fact, it is definitely much more easier than the conventional trading or the traditional trading. You need not contact the broker directly, you can do it. Advantages of this online trading is that you yourself can open, manage, and close your accounts. You need not visit anywhere. You can sit at your home and do all these things. Transactions can be made more easily at a mouse click or at your fingertips. You can do it. Multiple financial products you can deal with, not only equity shares, bond, derivatives, all these things you can do it. And one more advantage is that you can be informed. That means your broker or sub-broker may be informing you, give you various kinds of market analysis, trend analysis. All these things will be readily available on your screen. So by interpreting those analysis, you'll be able to take a decision whether to make investment or not. That is the advantage. Now, this point might be coming to your mind that how this online trading works. How it works, the moment you place an order, whether it is a buying order or a selling order, the order gets registered or gets saved in the database of the trading record. Suppose you want to buy X company share at a particular price, it gets registered. Then system automatically searches, or system looks across the platform that is there anyone who is interested to sell that product, that many products at that price. So if you're buying offer that the other person selling offer matches, the order get executed. Okay, that is how it happens. So normally it takes 3 days. 3 days. That means today plus 2 more days. T plus 2 days we call it, to complete the settlement. That means if you are buying something, that amount will be reflected in your demat account. That is dematerialized form of. Uh, you can say that is an account where securities are held in dematerialized form. So it can be reflected there in T plus 2 days. This is how the system works. Okay. And to start this online trading, this is the standard process one may follow. First, you have to select a broker. He is basically a depository participant who act as a mediator between the stock exchange and yourself. So, in our country, there are two depositories, NDSL and CDSL. Earlier classes we have discussed about this thing, and they have many depository participants. You have to select one of them. One of the depository participant, or it's a member of the, or pro is a member of the depository participant who will be working as a stockbroker. Then within that, you need to maintain one demat account and trading account. With the help of these accounts, you'll be able to trade and you'll be able to take delivery of the stocks. Once stock is delivered to you, that means once the equities, shares, or any other financial assets are delivered to you, then it can be stored in your demat account. So demat account, you can say it is a passbook kind of thing, whereas securities are held in dematerialized form. That means you did not be holding the physical form of the share certificates, but it will be held there in your demat account. So therefore, if you want to take delivery, then demat account is a must. And trading account is required, with the help of which you'll be doing buying and selling. So first thing is that select the broker. Second is open demat account and trading account. And for fund transfer, you need one. You may be needing one more saving account also. Then understanding the online trading platform. That's also you need to understand, because these brokers will be offering you various facilities like mobile trading app or various analytical tools, various softwares, downloadable software they might be offering. So you need to understand how to work with that. If this is your trading platform, how to work with that. You need to understand the process, how to buy a stock, how to sell a stock, and how to add something to your watch list, how to understand the trend. Okay, so this thing, that understanding is required. So once these things are over, then you are now ready. You can start trading with your stock. That's easy. So I repeat the steps. You select a broker, open demat account and trading account, then understand the online platform, then do the trading. The trading is, of course, as you know, stock market always fluctuates. It involves certain risk. So before venturing into this kind of thing, so you are expected to, or you are supposed to do a kind of risk analysis where you are making investment. You need to know what are the risks you are going to take. There is always a possibility of losing money. There is also possibility of gaining. So normally, before starting trading, you can do one more thing. Before starting online trading, if someone is really interested, you may do something which is called as the paper trading. Paper trading means you imagine that you are purchasing these many shares of this company. Just note it down. Okay, and see actually what is happening. See, tell you what are the changes in the price, what the price movements you observe. Then you take a decision to sell in some other way. So in the paper, just you note down. That means imaginarily, with your imagination, you keep on buying and selling. That will help you to have some experience in the stock market. You yourself will be able to understand that through this paper trading, whether actually you are gaining or losing. You may do it. Okay. After that, once you feel confident, then you may start practicing. There are other softwares that are available when you can buy and sell at a simulation. But paper trading will also be helping. It will have equally effective. So once you gain experience, so once you get confidence over your decision, that you are capable of deciding that which equities or which stock is to be purchased, which stock is to be sold, then after getting that confidence, then you may enter into the market online trading and do the transaction. Yeah, the various kinds of trading we talk about in the stock market. Right. First, one very popular kind of trading, which is called as you can say intraday trading. This is impacted trading. Here, the people who participate in intraday trading, they are not interested to take delivery. That is, the morning they buy, evening they sell it. In the meantime, they try to add some profit. That is called as intraday. And typically, friends, stock market is a different kind of market where it is not necessary, or for doing this intraday trading, it's not necessary that you should have something in uh, some stock should be there in order to sell it. That means without having a stock also you can sell the product or sell any. So that is possible in case of intraday trading. How it is possible? Let us try to understand the concept. As you already know, everybody is interested to make money from the stock market. People enter into that market with an expectation that they'll be earning high money. And the rule for making money in stock market is very simple rule. All that you have to do is to buy a product when it is price is less and sell it when price is high. And price always keeps on changing. Okay, on daily basis it keeps on changing. On monthly basis you can find it. On periodically you can find out life price always fluctuates. So in that fluctuation, you have to pick up a point where you feel price is low, and you should be able to sell it at a point where price is high. All that is what it is. When it is say, it appears to be so simple, but practical implementation is different. Okay, normally people do the reverse. When prices goes off, they feel okay, market is up, let us buy, and they end up in selling in a situation when price is low, so they lose. If you do this thing, buy at a high price, sell at a low price, definitely you'll be losing money. But if you do the reverse, buy at a low price, sell at a high price, then it is profit. So when coming to intraday trading, it is not necessary that you have to buy and then you have to sell. That concept also, friends, try to understand. In that kind of trading, what happens if you feel that market may be going down? So earlier, what you have understood, you have to buy at a low price, sell at a high price. Sorry, buy at a low price and sell at a high price. That means you can gain only when market goes off. If market goes off, you can buy at a low price, sell at a high price, you can make profit. But in intraday trading, you can also make profit when market goes down. Market is going down, but still you'll be able to make profit. How you'll be able to do it? If the price is high, you buy. Sorry, I told you that when price is going down, you can make profit. So when the price is high, immediately you sell it, even if you don't have stock. At the day end or before the day end, when price is low, it buy. Your broker will get it settled at the day end. Okay, settlement will happen at the day end. At the day end, you will square up the transaction. But what you are doing, you are selling fast when price was high. Maybe morning price was high. Okay, maybe at 10 o'clock price was high, and you are selling it, let us say, at 2 o'clock. Sorry, you are selling it as 10 o'clock. First you are selling, then you are buying. Are you getting it? But day end, things will be squared up. That means you are selling even if you are not having stock in your account. You have not taken any delivery, but you are squaring up the transaction at the day. So this is how when the market is down, still you will be able to make profit. Market is up, you can make profit. Market is down, you can make profit. Okay, you may have to practice it a little bit to understand that how it happens. But at basic level, to understand how it is possible to make profit when market is down, I gave you some idea. Okay, I think you're able to understand this. So this process of buying and selling in the same day and squaring up the transaction at the day is referred to as intraday trading. Okay, here you are not taking any delivery. The equities or the stock is not reflected in your demat account because you bought or sold or bought. First you bought something, then you sold, or first you sold something, then you bought. But the day end gets squared up. And for doing that thing, your broker may give you margin also. That means even if you don't have money or if you have less money, you can buy more stocks also. Broker is allowing you to do that. Okay. So this is one kind of trading. What I explained you report was intraday. Okay, at the day end, you need to book your profit or book your losses quickly before closing of the trading hours. So this is a very aggressive style of trading. So normally experts, stock market experts who are experienced, they do this kind of trading. Then other trading, as I told you, are the delivery trading. That means you are taking delivery. Normally the investors, long-term investors do the delivery trading. Okay. Then there is one more kind of trading which is called the swing trading. Swing trading means you hold the stock for more than one day. Within the day, there is momentum in stock. But if you want to capture the additional momentum, you may hold it for a little more time, not necessarily 1 day, maybe for a little more time. That is called as the swing trade. That means you want to capture the additional momentum and you are holding the stock for a relatively longer period of time. On the positional trading, here what happens, you take a position. That means you hold the stock for few longer term, maybe for few more months or maybe for some years, because you are anticipating in the long run price may go up or price may go down. You might be thinking, you may think a price may go off, therefore you may holding it. That is your position. That is called as the positional trading. So three kinds of trading I told you. Intraday trading, in that context, I also told you there is something called as the delivery trading, that you take delivery, not intraday. Swing trading, then positional trading. Okay, these positional traders, since they hold it for long term, they take their decisions on the basis of technical analysis as well as fundamental analysis. So consider both the things, and on that basis, they take a position, whether to hold it or to buy it or to sell it. Okay, that is their position. Buy, sell, or hold. Okay, there is one more kind of trading which is referred to as a technical trading. That means purely on the basis of technical analysis. That means on the basis of analyzing the trends and fluctuations in the market. Okay, so in your security analysis and portfolio management, you must have studied various kinds of trends that stock market shows. Okay, normal bear trend, bull trend, you are aware of, and the pattern of these trends, like let us say head and shoulder pattern, reverse head and shoulder pattern. So by interpreting those patterns, they try to understand that what is the support level, what is the resistance level, how the stock market will move within that. Right, on the basis of that trend analysis, they take a decision. That is what it is called as the technical trading. Okay, they look at the graph, they try to find out what is the pattern in which this graph moves, and what is the support level, what is the resistance level, and they take a decision whether to make investment. Understood it? And coming to fundamental, coming to fundamental trading, here what happens, the investors take decision on the basis of company fundamentals. This concept I understand you must have studied in your portfolio management also, that to understand the fundamentals of the company, you need to understand the environment, that means you need to understand the economy, you understand the industry, you need to understand the company. On that basis, you need to arrive at the fundamental value or the intrinsic value of the shares. You might have to refer to the financial statements, might have to refer to the historical earnings, growth, management, all these things you have to analyze. On that basis, you will be able to arrive at the intrinsic value. And if the stock is trading at a price more than the intrinsic value, then normally one should not buy. But if it is selling at a lower than the intrinsic value, then you can say stock is underpriced. Then normally one can take a decision to buy it and hold it when price correction will happen. Price correction will happen means it will reflect the intrinsic price. Now it is underpriced, so one can buy and hold. When price correction happens, one can sell it. In that process, one can make some profit. That is called as fundamental trading. Understood this?
Yes, sir.
Okay. There are other classifications of trading like this. Intraday trading, I told you. Delivery trading, I told you. Normally, experienced people go for intraday trading, and beginners go for delivery trading. And there is a concept of short sell. Short sell, the example I gave you, that first what you will do, first you will sell it, then you will buy it. You will sell it when the price is high and buy it when the price is low. In intraday trading, that is just possible. Then one more concept is there, BTST, that is buy today and sell tomorrow. You hold it for a day, buy today but sell it for tomorrow. You want to capture the full 1 day's market movement. Or you can do sell today, buy tomorrow. That's also possible. And margin trading. Margin trading means even if you don't have money in your account, your broker will give you some margin with the help of which you can buy more stock. So this is how various kinds of online tradings are possible in our country. Okay, I think you got a fair idea. Exactly how to do it, you see, so many videos are available online. One can easily see to it. So your broker will give you access. You can do it in your mobile phone also. Very simple screen. You can see your watch list, which are the stock. You can find out a particular stock, you can find the analysis, right? And you can see your money available in your trading account, and you can go there, buy and sell. Just add it, subtract it. Stock will be added, stock will be sold. You can do all these things. So I think you got some basic idea about online trading, right? Having covered this, now let us move to the next concept, which is about the process of dematerialization. Friends, as you know, when shares are issued, you know the concept of share certificate. The issuer is supposed to issue share certificate. And every time when you do the transaction, let us say you are selling shares, buying shares, then maintaining that share certificate in physical form is very difficult. Therefore, what is the alternative to that? Alternative is that the shares will be dematerialized. That means it will be kept in electronic form. Okay, that concept of converting physical shares into electronic form is referred to as dematerialization. So, if you read this slide, it says dematerialization, the process of converting your physical shares and securities into digital or electronic form. Why it is necessary? It is required to smoothen the process of buying, selling, transferring, and holding. And this process, who does it? This, you know, in our country, there are two depositories. One is CDSL and NSDL. CDSL stands for Central Depository Services India Limited, and NSDL stands for National Security Depository Limited. So they have many, these two are depositories, but they are DPs or depository participants. So these two entities, they keep this thing, shares and other securities in electronic form or in digital form. They are responsible for doing that. How to get it dematerialized, how to get this dematerialized, that process. So if you go to their sites, that is CDSL site or NSDL sites, so they offer, there is a link on the services. And the services, you can find out the dematerialization process. You can check it. You yourself can try it today. Visit to their sites and find out dematerialization services. You can understand how securities can be dematerialized step by step. It has been explained. Okay, so here I'm giving you some broad idea about the process of dematerialization, but you can see the process in detail if you visit to their site, either NSDL website or CDSL website. First, you have to select the depository participant. Then you have to fill an account opening form, right? Then, so this process I'm talking about for opening a demat account. Demat account you can open with any depository participant. So this is the process of opening Demat account. Select with whom you are going to open. Then fill up the application form, submit various documents like which is popularly called as the KYC documents, like your identity proof, address proof, all these things, your photograph. Then sign a standardized agreement with the DP. Then your documents will be verified and Demat account number will be generated. Once Demat account number is generated, then your securities can be held in that Demat account in electronic form or in digital form. This is the process of opening a Demat account. Okay, but I request all of you to visit to the site, NSDL site or CDSL site, and find out and try to learn what is dematerialization, what is the process of dematerialization. Okay, will you be able to do that?
Oh, yes, sir.
Yeah, please try to do that. Now, we'll move to one more concept. So, you know, all these things we are doing through a broker, that is buying, selling, etc. We are doing through a broker, which are called as stockbroker. He may be an individual, maybe a firm also. So you can say he or it is a finance professional who executes the order. Even if you are doing it online, it is routed through a broker. It is routed through a depository participant. And he is registered with SEBI. Okay, what is SEBI? I think you know. SEBI means
Sir, Security Exchange Board of
Security
India.
Exchange Board of
okay.
India.
So all the sub-brokers are supposed to register themselves with SEBI. You can visit to SEBI website also. You can find out the rules for registration of stock brokers and as well as sub-brokers. Okay, so each broker is supposed to be registered. So normally a broker acts on commission basis. When he does a transaction, he gets a commission. We can classify the brokers broadly into three categories. One is full service brokers. Second is discount brokers. Third is robo advisors. Who is a full service broker? So they provide various services to their clients. They give customized support. Okay, they will help you in buying and selling. They'll execute your order. But in addition to that, they give you various customized support. They give you advices. They give educational material and financial advice. So they give stock recommendation. Okay, tailored according to your plan, according to your investment plan or according to your brokerage plan, they design advices. They also disclose what is the risk involved in various kinds of investment. They give stock tips. So many varieties of services they provide. Therefore, they are called as the full service brokers. Right? They don't do just buying and selling. They also give you all these variety kinds of services. They are called as full service brokers. Then who are these discount brokers? Discount brokers only they will be executing your orders. They do not offer you any additional services. They buy, they will help. That means you will be buying or selling through them. Your orders will be executed by them, but additional services they will not be able to give. So naturally, their commission are less. They are called the discount brokers. One more kind of broker is all there, but actually they are not brokers. It is in fact automated digital platforms who provide these financial planning services online. Their platforms. So by using the logic, the way you select your stocks, by your style of investment, select, they give you advices. Okay, they understand the trend and they try to find out some advices which is suitable for you. They're called as the robo advisors. So these are the three kinds of broker we have understood. Now, friends, let us understand quickly the registration of the brokers. As you already know, any broker or any broker, sub-broker needs to register with Securities and Exchange Board of India. And there is a rule which is called as Security and Exchange Board of India Stock Broker and Sub-Brokers Regulation 1992. Under this, they have to register. Okay, how to get it registered? Then if you go to the SEBI website, you can find out that rule that will exactly tell you. I am going to share it with you, that rule right now. Just have a look. This has been downloaded from SEBI site. You see, this is called the Securities and Exchange Board of India Stock Broker and Subbrokers Regulation 1992. Here, if you see that after preliminary things, this is the registration of stockbrokers, this is the registration of stockbrokers. You see, right? This regulation 3, 4, 5, 6A, 5, 5A, all these things will be talking about the registration. Application of stockbroker. Let us go to Rule 3 to have some idea first. Okay. You see, this is Rule 3. Registration of stockbrokers. You can have an idea. This is SEBI's rule. So you have to make an application and you'll be getting a certificate. Without grant of certificate, you are not supposed to practice the broker service. Okay, how you'll make application? The application has to be made a specified form that is called as a Form A. So if you go to the last part of this rule, you can find out Form A will be available. Format of Form A will be available. You see, this is how you have to make an application. Right? You can have a look. Form A, application for registration of the stockbrokers with Securities and Exchange Board of India. So all these things you give, all this data. And then the process you can see, which is there in Rule 3, that has to be followed step by step. You have to do. Okay, you have to give it the stock exchange. Stock exchange shall forward the application to the board as early as possible, but not later than 30 days. Okay, then by following the normal process, board will approve it. Then it will become a registered book. Once somebody is registered, he will be able to do the trading. Okay, so friends, as per our plan, we had planned that we'll be covering about the concept of online trading, the concept of dematerialization, and the concept of broker, and various types of broker, various types of trading, and the process of registration of the broker. Process of registration of broker is a detailed process. Exact process is there in the regulation. If you want, you can read it out. Otherwise, just briefly remember, this is the process. One has to apply through stock exchange in the Form A, has to be filed. Okay, so I think you got a fair idea about this. Any query you have?
No, sir.
No, sir.
Okay.
No, sir.
Then thank you very, very much.